This is Reza and welcome to Profile Traders. And today's presentation, which is a brief one, will cover the topic of authentic market profile versus what I call fake market profile. So let's start to look into it and see what we mean by that. Authentic market profile. Traditional market profile is based on time and price opportunity, which we call TPO. The TPOs are the letters that you see in the chart here, and each time there is a transaction at a price, a letter is printed on the chart, and as the market develops, it will populate the bell curve. Then each half hour has a distinct letter assigned to it. First half hour start with A. When it's over, then B period will start, then C, etc., all the way to the close, which will have the letter N. So once you have this chart in hand, you will be able to see a variety of items. You will be able to see what kind of open you have, which is crucial to be able to predict or anticipate the type of day you will have during that session. You will have buying tail, selling tail, which will show you at the extreme of the profile if you had rejections or not. If you had rejections and you see, for example, a buying tail down here, that tells you that likelihood of the bottom holding is pretty strong. If you have a selling tail in place, it will tell you likelihood that the top will be holding is strong. If you don't have any of them, it will pretty much tell you the top or the bottom is vulnerable for a future break. You will be able to see areas of minus developments where two letters or less are visible. That will be an extremely important information, because once price is allowed to reject back into these areas of minus developments, then you would know that most likely it will travel through the whole zone, since whoever created the minus development is no longer there supporting the price. You will be able to see value areas, which is in this case the orange box, where 70% of all the actions took place. So you have the value area high at 1131 and a quarter, value area low at 1123 and a quarter, point of control, which is the area where you had the most TPO, is at 1125 and 75. You can also see that 290 TPOs are above the point of control, 171 below the point of control. You will be able to see areas of overdevelopment, underdevelopment. In such case, above the POC is very developed, below the POC is very underdeveloped. If this market was still open, that would have increased the likelihood for price to come down and develop the areas that needed TPOs. You will be able to see the initial balance, which is the range of the first hour. You will be able to see if there has been a range extension, meaning when the range of the first hour was set, if price is exiting out of it or not. You will be able to see the shape of the profile. It can either be like here, a D shape balanced, or if it's overly developed at the top, you will be seeing a P shape. If it's overly developed at the bottom, you will see a B shape, etc., etc. The details of all this for the purpose of trading strategies are all covered in our market profile bootcamp, so I'm not going to give a lesson about the whole thing right here, but I just want to emphasize that when you look at the authentic market profile, these are all the tools that you have in hand in order to trade successfully. Every single of these items listed above are extremely important, every single one of them. If you do not have them, or if you're missing them, you are trading at a great disadvantage. Now we're going to go look at the fake market profile. Fake market profile consists of slapping a volume histogram over a candle or a bar chart and call it market profile. And why am I bringing this point out? I'm bringing this point out because increasingly I am seeing services that are pretending to teach market profile. They take people's money, they don't teach them market profile. All they do is exactly this. They put a volume histogram over a candle chart and only focus on three things: value area high, value area low, point of control. Now, what's missing here? What's missing here is that, number one, this is not TPO based, it is volume based. So the histogram that you are seeing here is not the same histogram as you are seeing here. It's a completely different product, completely. As a result, you will get wrong levels. Example, we are looking at ES for this date 9/20/09/23, and it is telling me that the value area high is 1130 and a quarter, value area low is 1121 and a half, and point of control at 1129. Now let's go look at above. Value area high 1131 and a quarter, totally different. Point of control 1125 and 75, completely different. Value area low 1123 and a quarter, completely different. So this is giving me the wrong information according to traditional market profile, TPO based. On the top of everything else, I only have three pieces of information, as I mentioned: value high, value low, point of control. I am missing the open type, I am missing buying tail, selling tail, I am missing minus development areas, I am missing underdeveloped, overdeveloped area, I am missing the shape that the profile is being taking, I am missing the areas that would be in need of being filled further with TPOs. Pretty much I'm missing 90% of the picture, and I'm focusing on volume histogram and three sets of information. So when you see this, be very aware. You are not being taught market profile, you are being taught indicator, candles, stick or bar charts trading, which is completely different than market profile. Now, conclusion: if you pay for a service or an individual to teach you to trade market profile, make sure that what you learn is the traditional TPO based method, or else you are wasting money. Authentic market profile is strictly TPO based. It can't be used with candle or bar chart. It can be called an indicator. It can't be mixed with other indicators. It's a pure method of its own, which makes it extremely unique and valuable trading tool. Now, if you look at this candle chart, some will even go further. Some will even take out the shape of the volume histogram and will only leave on the chart three levels: value high, value low, point of control. And then they will slap a stochastic or many other indicators to confirm if yes or no they will be buying or selling at those levels. I'm not criticizing it. If it works for you, great, but I'm just highlighting that it's very unfair for consumers and for users to sell them a service called market profile while it is done in such manner. Thank you for watching this short presentation, and visit our website if you wish to learn more. My market profile bootcamp cover all the detailed strategies and explanation of the concept for the purpose of trading. If you're interested, contact me. Thank you very much. Have an excellent day.